Hello, everyone. Welcome. This is educational video number 5, which we are going to title as the rubber band effects. Okay. And you'll see why in a minute. So, today we're going to go over Bollinger Bands and the moving averages and why they're very important. Okay. Now, some people use Bollinger Bands, some people don't. We use them here and they're very, very useful. Okay. So Bollinger Bands are based on a moving average of the price of the stock. The bands adjust automatically based on the volatility of the market or the stock. Okay. So they're kind of, you could think of them as like a moving average, but not really. Okay. So you can see here on the chart, I'm using the stock Upstart just because we highlighted and talked about it yesterday in the community. It was a sell signal on the Delphi signal, which got about an $8 drop off that sell signal. But, we're here to talk about this. So I have the Bollinger Bands. Okay, the top one you can see in the purple and the bottom one is in the green. Okay, normally there's a middle one, which you could use. I don't tend to not use it. I more use the averages as well. So, Upstart is a very volatile stock. So this could be an extreme view of how the Bollinger Bands do work and the rubber band effect, not only with the Bollinger Bands, but with the averages, okay? So what we can see here on the chart, just going back, very rarely does a stock go above or below the Bollinger Bands, okay? You can see there was a time here, and these lines are actually past lines that we took trades on that did really well. Obviously, here's a big one, kind of seems similar to this with that shooting star, and then here we got above. Never really got below except here maybe, and it touched it here. But whether it gets above or below the Bollinger Bands or it touches them, it's really the same result, right? And what is that result? Again, you get a rubber band effect, okay? You can even see here it didn't even get up all that way. Rubber band effect, right? Rubber band effect. Here again, we took a trade, did really well. Rubber band effect, okay? You can see that, okay? And I can gonna guarantee you that this one is gonna play out as well, okay? And also you can see here as it got to the bottoms, right? Or not even close, close or not, okay? We can see these rubber band effects, okay? So you need to pay attention to the Bollinger Bands. I have this set at a 20-day period, and the standard 2 deviation, which I think is the default on Thinkorswim. So it's 20 period, 2 standard deviation for those of you guys who want to add this to your charts, okay? But again, you can see here, you have to pay attention when you see stocks get at those levels, right? You can see what happens, okay? So the Bollinger Bands are very important to pay attention to, signs of overbought, oversold, okay? And the same can be said with the moving averages, okay? The red is the 50, the turquoise or the blue is the 20-day moving average, okay? I use a weighted moving average. Some people use a smooth moving average. To be honest, there's not that big of a difference. If there is, it's very minimal. But again, just using the 50-day, the red one, you can see what happens when the stock gets far from the average. You get the rubber band effect, okay? We can see that, okay? We can see the 50-day, and then you get the rubber band effect, okay? Here, it was pretty severe here from the moving average, but again, you get the rubber band effect, okay? Same thing here, okay? We can see when stocks deviate from the moving average a good amount, up or down, you get the rubber band effect. You get that snapback effect, okay? And, look where the moving average is here now on Upstart. So again, I would say we're going to get that rubber band effect down, okay, way over the top Bollinger Band. So again, this is very important to monitor, have on your chart if you want. The Bollinger Bands are an amazing tool, and then also, the moving averages we talked about, roll resistance, support, support and resistance, roll reversals. The averages do the same, okay? Whether you're using the 20-day or the 50-day, okay? When a stock gets above the moving averages will act as support, okay? We can see that, okay? It's clearly moving averages are acting as support, okay? And once the moving averages are broken, they become resistance, okay? We can see that. So that's the other thing you need to pay attention to on moving averages, okay? I know traders that trade the moving averages. If they see a close above the moving averages, they'll play it for a trade, maybe momentum, and then, vice versa to the downside. But, you guys need to take what we are showing you in these educational videos and apply them to your trading how you will, okay? We can't sit next to you and trade next to you, okay? We're just kind of showing you, giving you the path, okay? So again, that's it for this short educational video on Bollinger Bands and the averages and the rubber band effect, okay? So pay attention to these, especially if you see bearish or bullish candles at those levels, okay? So it's very important to watch and follow, and hopefully that helps you guys with the trading, okay? There will be a couple more videos coming out after this. So pay attention to that. We will make an announcement in the chat when these are posted in the Classroom 101 channel. All right, so that's it for today. Again, wish you guys the best. Good luck trading and take care.